Meanwhile, the US dollar index recovered some losses as investors continued to assess the Fed's outlook in light of shifting trade policies. For more on this, we're joined by Farah Mourad in Dubai, Senior Market Analyst at Equiti Group. Thanks for being with us, Farah. Now, tech stocks in Asia have shrugged off those declines on Wall Street. So what's lifting confidence there?
Thank you, Taiba, for having me. What we're seeing now is a tactical rebound, driven mainly by bargain hunting, I would say. Traders are buying the dip, but long-term investors as well probably repositioning right now, especially in AI semiconductor names ahead of the US earnings season. So we are expecting this rebound, especially after the huge setup we saw yesterday. Some investors as well are expecting a pivot point from the Fed, despite the latest signals that we're hearing, which is highlighting the fact that probably the Fed is not going to come to rescue the market, especially if this shock is driven by policies, tariffs. So that's something that we need to take into consideration. And this is why we're considering this bounce to be at least on a short-term scale, not a start of a trend, until at least seeing more signals in the market.
Right, and the Fed has said, as you mentioned, that it's in no rush to cut rates at this point, and it's warned continuously against Trump's tariff. So what would be the best and worst case scenarios for investors?
The best case scenario definitely would be, I would say, de-escalation of what we're hearing right now. A possible way that usually Trump starts a negotiation with the most aggressive scenario, just in order to sit and negotiate. So that's definitely something that the market are anticipating. And this is why, by the way, last week we saw this rebound just after the news of 90 days pause on the tariffs. The worst case scenario definitely would be a bigger shock to the market, higher tariffs, the Fed not interfering to support the market. That's inflation as well as lower growth. And that definitely would be the worst case scenario for the market.
And in light of this escalation, we are seeing gold prices surge to new record highs almost every day. Were you expecting such levels of gold prices to soar?
I mean, it's definitely above expectation, but it's logical. The gold is not acting just as a classic safe haven. There's deeper concerns, long-term inflation, even banks demand. Banks somehow are hedging against their own policies, the dovish policy that they might be moving towards in the next couple of years. So it is probably stretched, yes, but it's still logical. I believe gold prices are supported, and there's definitely too many signs that we might see even higher prices. Let's say, for example, the ratio of gold compared to the liquidity circulation, the currency circulation. And that, I would say, sign alone, gold can even peak towards $5,000 and $7,000 per ounce and still be logical. So yes, it is stretched. We're seeing signals of overbought situation on some technical signals, but it is still logical and the trend is supported.
Right, Farah Mourad, we will have to leave it there. Thank you very much for being with us.